Welcome to the Deep Dive, your shortcut to understanding what really matters in crucial earnings calls.
And today, we're digging into the latest from Sify Technologies Center. Let's see what their numbers are saying.
Yeah, let's start with the headline figures. What did Q3 look like for them?
Okay, so for the third quarter of their fiscal year, 2024-2025, revenue came in at INR 10,491 million.
Okay.
Which is actually a pretty solid 21% increase compared to the same time last year.
21% year over year, nice. And profitability.
Yeah, operating profitability measured by EBITDA also saw a decent bump. It reached INR 1,914 million. That's up 13% year over year.
So top line growth looks healthy. EBITDA's up. Seems pretty positive on the surface. But wasn't there more to the story on the bottom line?
Ah, yes, good point. While revenue and EBITDA were climbing, they did report a loss before tax of INR 119 million. And the loss after tax was INR 258 million for the quarter.
Okay, so a loss despite the revenue growth. What's driving that? Big spending.
Exactly. They made some substantial investments. Capital expenditure, or CapEx, was quite high at INR 3,343 million.
Wow.
Though they still ended the quarter with a decent cash balance, INR 5,327 million.
Right. So spending heavily, presumably on growth initiatives, which is hitting profit right now. Let's break down where the money's coming from. How do the business segments look?
Sure. So network infrastructure services, that's their biggest chunk, bringing in 41% of the revenue.
Okay.
Then you've got data center colocation services, that accounts for 36%.
Right.
And the rest, 23%, comes from digital services.
The network infrastructure leading the pack. That makes sense with, all the talk about connectivity. What are they saying is really driving performance, especially considering those investments?
Well, a big theme in the call was artificial intelligence. AI.
Well.
They explicitly mentioned that strategic investments in building up their AI capabilities, and importantly, hiring personnel for that, were key reasons for the higher depreciation and interest payouts.
I see.
Costs tied directly to financing all this expansion,
So those losses we saw, maybe not a flashing red light, but more a sign of them really pushing hard into AI, spending now to hopefully reap rewards later.
That seems to be the narrative, yes. Investing for future gains in a potentially huge market.
Makes sense.
And actually, on the financial reporting side, there are a couple of things worth noting. They've adopted a new accounting standard.
Oh.
Yeah, it's called IFRS 8. Basically, think of it as just a different way to present their financial statements. It's meant to give a clearer view of how each business segment is doing individually. This kicked in from the quarter ending June 30, 2024.
Okay, so the report looks different. Maybe the segment details are rearranged, but the actual financial health, the total numbers, they aren't changed by this specifically.
Exactly right. The total income, the net profit, those core figures aren't affected by adopting IFRS 8 itself. It's purely presentation for segment reporting.
Got it.
However, and this is important, the comparison numbers, specifically for December 2023, have been restated.
Restated, why?
Yeah, they had to revise them because of an amended filing of Form 20FA. They submitted to the SEC back in January this year, 2025.
Okay.
So just a heads up for anyone comparing this Q3 report to older ones, make sure you're using the updated December 2023 figures.
Good catch. Important detail for digging into trends. Okay, let's circle back to that strong growth in network infrastructure services. 21% up. What's the secret sauce there?
Well, according to Sify, it boils down to the heavy lifting they've done over the last couple of years. Big investments in their wired line infrastructure.
The laying fiber.
Exactly. They specifically mentioned deploying fiber networks in, I think, 17 cities now.
17, wow.
Yeah. And they're pretty bullish that this growth isn't a blip. They see continued tailwinds from, general digitalization across India, plus this anticipated wave of demand from enterprises needing serious network capacity for AI workloads.
And they're backing that up with numbers on the network build out itself.
Oh, yeah. They're scaling up. The number of fiber nodes they have across the country is up 14% year over year, reached 11,191 nodes.
Okay.
And for their more advanced services, the deployed contracted SDN service points, that number is now sitting at 9,473. So real expansion happening.
All right. Now let's shift gears to data center colocation, another area we know is buzzing. What do the reports show there?
More expansion. They commissioned an additional 5 megawatts of data center capacity just in this last quarter.
It's 5 more megawatts, okay.
As of the end of December 2024, that brings their total to 12 operational facilities spread across 6 cities, and the total commission capacity is now 120 megawatts.
And how much of that is actually being used or contracted?
Get this, 110 megawatts out of the 120 total are already contracted.
Yeah, that's really high utilization. Suggests pretty strong demand for what they're building.
It certainly does, and they're not stopping there. They have 2 brand new facilities, big ones, each designed for 26 megawatts, that are expected to come online pretty soon in the coming months.
26 megs each. Those are sizable.
Yeah, and on top of that, they're pushing hard in Mumbai. 4 more facilities there are apparently in advanced stages of development.
4 more just in Mumbai.
That's what they said. They expect those to go live by the end of this calendar year, or maybe even, quote, slightly earlier.
Mumbai definitely sounds like a key growth hub for their data centers. Okay, so network and data centers looking strong, investing heavily. What about the third leg, digital services? You mentioned that made up 23% of revenue, but I recall it wasn't profitable this quarter.
That's right. It actually posted a loss.
What's the story there?
The company gave 2 main reasons. First, a change in the revenue mix within that segment. Second, and this ties back to the overall strategy, ongoing investments.
Or investments.
Yep. Specifically in building out their leadership team for digital services and strengthening their technology leadership. Again, it's all about positioning for future opportunities, particularly around upskilling and reskilling, likely tied to that AI transition we discussed.
So another case of strategic spending impacting the short-term bottom line.
Seems so. And they signaled this isn't over yet. They expect these investments in digital services to continue impacting its profitability for maybe the next couple of quarters.
Okay, that makes sense within the broader picture.
Yeah.
We also saw, I think, a notable jump in their general overhead costs.
Yeah.
Selling, general, and admin expenses, SG&A.
Yeah, SG&A was up significantly.
By the jump.
Directly linked, they said, to strengthening their leadership teams, not just in digital services, but across all their business segments, basically bringing in more senior talent to manage this growth and the strategic shift.
And is that the new normal for SG&A?
They indicated that, yes, this current higher level of SG&A is likely what we should expect for the near future. It's the cost of scaling up their management structure.
Right. So stepping back, it really paints a picture of Sify Technologies Center making a very conscious, very significant bet on India's digital future, particularly around AI infrastructure.
Absolutely. You can see the strategic repositioning quite clearly. They're building the network capacity, they're building the data center space, and they're trying to build the digital services layer, all aimed squarely at capturing that anticipated surge in demand for AI workloads from businesses in India.
And the idea is that the maturity across all 3 areas, network, data centers, digital, will attract those enterprise clients.
That seems to be the plan, a kind of integrated offering to support AI adoption.
Okay. Now, during the Q&A part of the earnings call, I know investors sometimes ask about, well, shareholder value and maybe getting broader participation in the stock. Did that come up?
It did, yeah. Someone asked about investor returns and potentially expanding the shareholder base.
And Sify's response.
They acknowledged that wealth creation for investors is important, naturally, but they said there aren't any specific initiatives for, like, expanding share ownership right now. However, they did mention their investor relations team is actively talking with the IR community, especially in the US, sort of exploring possibilities for, quote, greater participation.
So engaging, but no firm plans yet.
Pretty much. They also said they'd take the feedback about focusing on investor returns into consideration for future evaluations. Fairly standard corporate response, really.
Okay. And one last operational detail, they gave an update on their Rebal campus. That seems to be a major data center location for them.
Yes, Rebal is clearly key. They stated that all 5 of their operational data center facilities there are either completely full or, quote, almost fully contracted and occupied.
Wow, so maxed out capacity in Rebal currently.
Seems like it, which highlights the demand there. And consistent with the overall expansion, they confirmed 4 additional facilities are under construction right there in Rebal.
4 more in Rebal alone.
Yep, and the timeline for those is expected to be operational by the end of this calendar year.
And how are they communicating progress on those builds?
Right now, it sounds like updates are mainly through their website and during these kinds of investor conversations. Nothing more formal planned for now, it seems.
Okay, let's try and wrap our heads around this. We've got Sify making these really significant infrastructure plays, data centers, network upgrades, clearly positioning themselves for this expected AI boom in India.
Yeah, and they're accepting some short-term pain for it, right? The loss in digital services, the higher SG&A, it all points to building for the longer term.
Exactly. So thinking about that broader picture,
Yeah.
it's time for our, let's say, creative thought experiment.
Yeah.
This is absolutely not financial advice, folks, just spitballing ideas based on the trends.
Oh, here we go.
Okay, so Sify is betting big on data centers and the networks to support AI. So here's a hypothetical, maybe slightly off-the-wall paired trade idea.
All right, let's hear.
Consider going long on companies that specialize in, say, advanced cooling solutions.
Yeah.
Specifically, ones designed for these super high-density data centers that AI demands, focusing on the Indian market where Sify is building.
Okay, long the picks and shovels play for data center heat. Makes sense. What's the other side?
Simultaneously, consider shorting traditional office real estate investment trusts, REITs, in India's Tier 1 cities.
Shorting office space. Why?
Well, the thinking is the big shift to cloud, maybe more remote work, efficiencies potentially driven by the very AI that Sify is enabling. Could all that put downward pressure on demand for traditional large office footprints?
Interesting angle. A bet on the ripple effects.
Exactly. It's not directly about Sify's stock, but more about the ecosystem changes their strategy implies and taps into. Again, purely hypothetical. Do your own extensive research before ever thinking about making any investment decisions. This is just food for thought.
Definitely food for thought. So that wraps up our deep dive into Sify Technology Center's latest earnings call. We've hit the key financials, their big strategic moves, especially around AI, and some signals for where they might be heading.
Yeah, lots to unpack. What really stands out to you from this call? What questions are still kind of lingering in your mind?
For me, it's tracking that execution, especially on the data center build-out, and whether digital services can turn that investment into real profit down the line.
Good point. And for everyone listening, remember, this breakdown is just the beginning. It's the starting point for your own analysis and thinking.
Absolutely. Thanks for tuning in to the deep dive. We'll catch you next time for another earnings call breakdown.